So a commercial stablecoin, which is issued by a bank, it's backed by collateral, and you can use it interchangeably. It's interoperable. You can use it across borders, and then it's actually settled and collated back to the bank, to the central bank. And what that will do is really allow new forms of money to exist. It's a digital dollar, a digital pound, a digital euro, for consumers to be able to conduct automation, have better privacy protection, and using a new form of money gives us a way to do things which we couldn't do before. So we're seeing that being developed, and in the future what we'll have is multiple jurisdictions having different forms of commercial stablecoins, which are all regulated as money, interoperating within their jurisdiction, but then cross-border for various use cases.
That's right, and we're seeing a lot of adoption around digital currencies amongst the central banks, aren't we? But tell us, how are you seeing that happen, and what are some of the benefits involved with that?
What we're seeing is a phenomenal take-up of CBDCs. If you look at the stats today, 105 central banks are actively working or implementing different types of CBDCs, and there's retail and then there's wholesale. And what that means is that the regulation has allowed them to take that step. So they are actively looking at the benefits, having cash, commercial money and central bank money working within the financial system. And what does that mean from a policy perspective? Well, it means greater visibility. They can understand risk, so we don't have another financial crisis. What does it mean to the consumer? Better protection in terms of disbursements. You can actually spend central bank money that's backed by the central bank as government payment. You can actually use it for various use cases that are wholesale. You can settle easily between counterparties using central bank money rather than going through multiple steps and checks, which take a long time. So the benefits that it brings is interoperability, privacy, and accelerated forms of digital money, which you can actually do really innovative use cases and automate complex payments.
What we're hearing walking around the exhibition floor is the question, what needs to happen for digital assets to gain traction within institutions? So let's start there.
I think digital assets have had a very interesting journey to get here. They were an unknown thing, but now we've seen the traction and the adoption by institutions led by regulation. And digital assets are an evolution of the way we're actually conducting financial services. So we've seen different pilots and use cases of people testing financial services testing digital assets. But what we're seeing now is the real world implementation within different types of asset classes, different forms of money in terms of central bank digital currency, and different types of institutions using it differently. So what is it going to take? I think personally good regulation, and we're seeing harmonized regulation come in. We are seeing different regions across the world endorsing the use of different types of digital assets for their domestic and institutional clientele or customers.
Sure.
And what we're seeing is the benefits it's bringing. And it's really down to benefits to the consumer, down to benefits to businesses, and what digital assets can do for them.
That's right. All right. Well, thank you very much for bringing us up to date there. And I think it's fair to say crypto and stablecoin might have not had the bestest of years. So tell us, what do you think the role of digital money has in the B2B space, and what does successful implementation look like?
Well, what we're seeing is digital assets take many forms, and one of them are crypto assets and stablecoins, and not all stablecoins are the same. What we've seen is speculative type of stablecoins, which are algorithmic and not really backed by different types of assets that are trusted or stable. And we've seen a lot of use and misuse of that type of asset, which has led to crashes within that market. But having said that, what we actually need to focus on is the institutional use of a payment using a digital asset.